Nifty has corrected right from 12,430 to about 7,511, and from there it has moved back to 9,400, to be precise 9,390, and that is the 38.2% retracement of the whole fall from 12,430 to about 7,500. So when Nifty went below 9,000 and 8,000, market valuation were quite comfortable. There are many stocks available at much cheaper valuations. It made sense to go and buy them. But now what has happened is that with all the economies shut in India, when Nifty is trying to cross 9,000 and staying up 9,300 odd levels or 200 odd levels, the trailing P multiple is again touching 20 plus. So with the current environment, when we do not have clarity about the revenues or the forecasted revenues of the company, I guess giving market trailing P of more than 20 will not be advisable as such. So from investment standpoint, I think people should put a pause. Either it should be halted for some time, or there should be staggered buying in place, which means buy at dips but do not chase the market. But let's say that if markets do not stop here and they keep going up, then of course we'll have to have a strategy in place to make some money out of the movement. So another thing which is happening is, so let's say if I cannot take help from fundamentals here, then let's take help from technicals. Another thing which is happening is that Nifty is following the mother market, which is the US market, and Dow Jones has actually retraced 50% of the total correction. And let's say if Dow Jones is trying to cross 24,200 odd levels, which would definitely mean that it would try to move towards 25,200 odd levels, which could be 61.8% retracement level of the whole fall. Assuming that Nifty is trailing an orbit to Dow Jones, then what can happen is that Nifty may also try to cross 9,400 and move towards 10,000. But unless 9,400 is crossed, there is no visibility that Nifty will move towards 10,000. In fact, even if Nifty crosses 9,400 and move towards 10,000, there will be one supply zone coming in between, which will be 9,600. So what we can do is we can divide Nifty into two parts. One is 9,400 and above, and another is 9,400 and below. The way it can be traded is potentially, let's say there is a support trend line on Nifty, which may give a bearish breakout below, let's say 9150 or so. So if Nifty is falling below 9150 and closing, then it makes more sense to trade short with stop loss of 9,400, little over 9,400 spot levels. And you can look for a target of maybe 8,600, and if 8,600 is also not sustaining, then move towards 8,000 to 8,200 cannot be ruled out. But let us say if Nifty is crossing 9,400, then in that case, what we should be doing is put a stop loss somewhere around 9150 or below that, and try to trade long for 9,600 and then 10,000 odd levels. But do maintain stop losses. So to synopsize, from investment standpoint, it should be staggered buying. Do not chase the market. Buy only at fall. For benefiting from the Nifty momentum, divide it into two parts, 9,400 above and below, and trade accordingly.